So Andrew, you probably heard about this already, but MongoDB has been going through some issues over the last few days. So apparently its stock has gone down 37%. And you and I are both in the tech sector, specifically selling software that kind of is used to support other companies in making applications, processing information for applications, texting them, etc., etc. And it's no hidden secret anymore, especially if you're in the eye of the storm like we are, that the software industry is not doing very well at all. You're seeing a lot of layoffs, but it seems like everyone's kind of been pussyfooting around it. And this one's really caught my attention because it's almost like the first admission that something funky is going on in the market. I found this really funny. So, when you watch normal kind of news, most of the time, you don't really know what the news is talking about, right? You kind of trust in the news to really educate you and take you really deeply into a subject.
Yeah.
Because you don't know much about the big subject. You're like, really? Wow, I learned this today from the news. This is probably an occasion where I might know more than the actual news.
Oh, okay.
And this is going to be interesting. So this is Jim Cramer. We've referenced him before. So he doesn't need much of an introduction. He talks about all sorts of stocks.
The mad dash, and it's another stock that's getting
annihilated, down 20%. Now, people are saying this is the worst this enterprise software company has ever seen. Now, this is what I'm talking about. They had a great quarter. I mean, firing on all cylinders. Really terrific. Their outlook at one moment, in one piece of the business, they say is bad. There are headwinds. Something's wrong. And, David, we had a downgrade from a very good firm. I've been, Wedbush has got a piece. Let me look. KeyBank's got the best.
Yeah.
One piece of the business. You mean the main part of the business? The database. The database.
Yeah.
It's just one piece of the business. I mean, it does so much.
I mean, look,
I love it.
Look at his notes. He's trying to find his notes.
He's trying to buffing our friend Jim is, but I found this really funny. Let's go.
They take it from buy to hold, and they say this. The past several quarters lowered our visibility into meaningful margin expansion and revenue recognition. In other words, reacceleration. So here's what people are saying. Everything that you've heard is past. Going forward, there will be no revenue acceleration.
All of that. Well, I mean, I love this, Andrew, because this is the first time we could go, wait, hold on a second.
Yeah.
We spent a whole load of nothing. What this really means is sales reps are not overachieving their quota.
Exactly.
That's it. In fact, they're probably underachieving their quota, hence what our analysis showed. Average tenure, 2.2 years. Looked at the salespeople just in the UK. Most of them, 8 months fired, 6 months fired. Those are territories that aren't being developed, that aren't producing business. So they're not that hot, are they? If they were hot, a monkey could hit quota, right?
Exactly.
Yeah? Okay. All right. So let's carry on. But I love this.
Going forward, there'll be no margin expansion. So going forward, there will be no PE expansion. So going forward, we're going to pay a lot less.
There is no PE.
There is no PE.
Yeah, there's no PE.
Andrew, on your side, can you just Google, is MongoDB profitable? It can't be profitable. As far as I'm concerned, to have a PE, you need to be profitable.
Yeah.
If the PE is blank, there's sweet FA.
Exactly, yeah.
Is it profitable?
No. No, it's short.
Not profitable.
In short, not. There's a load of faff here, but no.
It's not profitable, right? Because the first thing you find out, it is profitable. They're screaming it off the mountains, right? Next, what they do, I'll summarize. Let's go.
Yeah, let's go.
Take software to help you organize and interrogate web-based data, and it actually did quite well.
He doesn't have a clue. He doesn't have a clue.
Interrogate web-based data.
It's a database.
Yeah,
it's the type of database. He would have just been better off saying, look, it's a type of database, right? It's quite new in comparison to the old databases. It's popular, right? It's basic.
So Mincy, I know you're a chef.
Yeah.
But, I've got some shares in this company called MongoDB. Andrew, what do? They interrogate web-based data.
Jesus. No, I love this. I love this because, it's only times like this where I go, hold on a second.
Yeah,
Maybe I can't believe 50% of the news is told by a load of waddies. Let's continue.
Well, okay, there was cannibalization from one little part. this is to step back.
There was cannibalization from one little part. Never mentioned it. So do you remember it said one specific part of its business?
Exactly, yeah. He still hasn't said it, has he? Or have I missed it?
Well, something tells me that this news outlet has a very good relationship with the CEO and they just refuse to give it bad press. And it's a small part. It does databases.
Yeah.
It does databases. Yeah, okay, it might have a few arms, that are innovative. A bit like, Andrew, Okta. Okta has many different...
Okta's got, the startup, the startup side of things.
You have an interface, you kind of click in there and you can purely access your company's resources via passwordless or one kind of interface. Yeah,
you could do workflows or whatever, but the core product is a platform, single sign-on.
The stock value has gone down 37%, because it's actually 37% since this news came out, because one little sliver of it isn't working. Bollocks. But I love it.
Yeah.
So right, it's reflective of the market sentiment right now.
Right. And that's why.
When does that change, Jim? And what changes?
No. See, I disagree. It's not one chink on its forecast. It's not.
It is the market sentiment. It's the market.
Yeah, the CEO has gone to JP Morgan or its board or whatever and gone, look, guys, this is it. It's slowing down. We're not going to forecast high growth. We're letting you know now. And that would have been about 2 quarters ago. And then they've gone, all right, let's keep an optimistic thing, and then we'll let the world know. What do you think?
Well, MongoDB is supposed to have been the darling of the tech sector when they IPO'd. Everyone was, talking about how great they were doing. But when you look at the results since they've IPO'd, there has been a steady decrease. But then for them to come out and admit, that they're not looking as strong as they'd hoped, has really hit their valuation. And I don't know what you think, Mencian, but a lot of the time I look at a company, how much profit are they making? And that's what their worth is, But when you look at a lot of these organizations that have IPO'd, they haven't IPO'd or they haven't been valued according to the amount of profits. It's all about reoccurring revenue rather than profit. And it seems really strange to me. Maybe it is because I'm a dinosaur. But, when we look at some of the companies that we worked at, and I know they did an IPO, but they were bought by venture capitalists and competitors and whatever. And the valuations were eye-watering,
I don't even think this company has a price to earnings ratio. Let's look at the good old Google graph. So usually you look at...
Yeah, I can see it, yeah.
You see where it says PTE ratio? Where there's a line there, it usually means that it's not profitable.
Exactly.
And obviously this was pretty much Amazon and Netflix and whatnot, where they said, look, we don't need to be profitable. We just need to acquire as much market share as possible.
Yeah.
And it was really Amazon that kind of put this model on the map.
Yep.
If you think about the fact they IPO'd in 2017, the reason why it's revolutionary is because with old databases like Oracle, and I can't think of any from the top of my head, but they were called relational databases.
Yeah.
They used to organize their data in tables. And this was like pretty much one of the technologies that scrapped all of that and said, look, let's just simplify databases. So they did something called a non-relational database where you could just use kind of text format data and then just structure it however you want. That's a really, really dumbed down explanation of what this software does. It's literally came as a major disruptor, and it deserved its IPO. Like literally every company uses a form of this. When it comes to companies like MongoDB, Snowflake, GitLab, MongoDB, Datadog, Atlassian, these were or still are the poster children, right? After the Microsofts of this world. The reason why I wanted to shine the light on this one, Andrew, is because for there to now be an admission by the CEO that profits are slowing down, that is a big telltale sign. And I've been seeing online a lot of salespeople losing their job, engineers losing their job. People like postings on LinkedIn for job postings that have been open for 3 months, 2 months. And you say to yourself, what's going on? Because no one out there is saying we're failing.
Well,
now, let's go.
No, well, one of the things with regards to the job things that I found frustrating as well is that you look at a typical enterprise sales role and you're looking at opportunities, that are 500K and above. You're looking at multi-million pound opportunities, etc., particularly with some complex products. I mean, we're not selling bread here. You know what I mean? We're selling complex solutions that take a long, long while. And you're looking at sales cycles of 9 to 12 months. But people are losing their jobs after 6 months. Yeah, people are being told, no, you haven't gone far enough down the pipeline, or you haven't built enough pipeline. And I think now companies, they want instant results, despite the fact that it's a complex product, and despite the fact that, especially over the last few months, we're looking at a pretty, an environment, both politically, financially, environment that's unstable, unpredictable. And I think, these sales reps are under a lot of pressure to produce results quickly. And, I don't know if it's the right strategy. It seems to be hire a load of people, and give them silly target, silly territory, and then weed out the ones that aren't doing very well.
I completely agree. And if you look at this, Andrew, so right now I'm on LinkedIn, and I've just on their company profile. So, LinkedIn likes to boast around the hiring rate, and they've got a total of 7,203 employees. What strikes me is the median tenure is 2.2 years.
Yeah.
That's, I don't mean to be funny, I think that's horrendous.
Yeah.
Because, and I'll tell you why it's horrendous, Andrew, in my opinion. Because if you go on interview for these companies, we really want someone, who is going to stay here for a long time. Someone who's got a lot. So the demand from you being at a company for like 3, 4, 5 years, but then the average tenure is 2.2 years.
And the horrible thing is, if you are going for a job, they look at your CV and they go, oh, you haven't stayed at places for very long, have you? And maybe a subject for another day or another cast is the job market out there, from not just a sales point, but, from IT, engineering, whatever it may be. There just seems to be a little bit of a struggle getting sales, getting new business, getting people to commit to products. And in turn, sales is becoming harder. And when you're not selling, it's a knock-on effect to the customer success, account management, the engineering teams, et cetera. So, it'll be interesting to see where this goes. It's all a little bit doom and gloom, in my opinion. I hope it's not going to be, but we'll see.
I think it's the first domino. That's my prediction.
Yeah.
That's why I kind of wanted to get on this between you, because I'm actually quite relieved.
Oh, really?
Because ultimately, there's been a load of judgment right now in the market, Andrew. A lot of people, why aren't you achieving quota? Look, there's the likes of X company and Y company, and they can do it, so why can't you do it too? And a lot of the quotas, a lot of the target revenues and expectations are actually based on the fact that these companies are going out there and going, do you know what I mean? So if they can do it, we can do it too. And now they've come out to the market and said, actually, no, not really. We were professing a 30% annual growth. It's really 12.5%. We're now officially a normal business. We are a normal business. Well, that's what normal, IPO companies are expected to do. About 12% growth a year, right?
Yeah.
That's what the S&P 500 does. If you put your money in the S&P 500, the average growth a year is 12.5%.
Yeah.
So, that is a relief, because we've been BSing for the last 6 years, Andrew.
Yeah. And also, I again, when you look at these companies, particularly, in this sector, and again, we've experienced it, Mency, with anyone that starts up, anyone that, wants to go into the market. What are the two countries they look at to enter the market with? Yeah. US
one
and
UK
UK.
number two.
Yeah. And almost 40% of their customers are in the US and UK, right? Almost 40% of their business.
Yeah.
And both countries are not exactly flying off the shelves with, growth and stuff like that at the moment either. That can potentially have an effect on it. But I agree. There's an old saying, what was it? Turnover is vanity, profit is sanity. And we may be going back to those days.
Of course. There's no maybe about it. People are going to demand their profits.
Yeah.
And the bullshit of mirrors is going to disappear. It hurts me. It hurts you. We're both in the eye of this storm.
Yeah.
You can't blame the salespeople anymore. You can't say we're all crap. That makes sense? Because a lot of the time I was bashing my head against the wall trying to figure out, well, hold on a second. Where are these millions being made? Because I'm a cold caller. I go out there to the market. I rub shoulders with people. I'm being told that this stuff can shift in 4 months, in 3 month sales cycle, and all this type of stuff. And now they're saying, actually, not really. Not really. We will just BSing the whole bloody thing. That's my opinion. I could be wrong.
No. I
But
completely
anyway,
agree.
I wish my colleagues at Mongo, well, people that I know, the best. This isn't a diss to MongoDB, and definitely not a diss to the people, but definitely need to shine a light on this one, especially because it's our experience, right?
Yeah,
All right.
agreed.